As the weather heats up, the market has continued to shift in favor of buyers throughout the month of June. So what are we currently seeing and how is this impacting prices? I'm Adina Dragasanu, Oakland Realty, here with your July 2022 market update. Let's jump right in and take a look at the numbers. I want to highlight three key trends this month. Number one, sales. We've seen a continuous decline in sales activity. Number two, inventory. Although we started seeing inventory accumulating, we're seeing the pace of new inventory is actually down relative to last year and last month. And three is how this is impacting prices and what we expect moving forward. Let's start off looking at sales, as this is what's really been making the headlines over the last few months. June sales were down 16% relative to May, and they were down 35% relative to June of last year. Taking a step back and looking at the 10-year sales average for the month, we see that this June sales were down 23% relative to that 10-year average. Looking at this by property type, we see that the segment of the market most affected was the detached market, with sales down to almost half of what they were this time last year. For townhome and duplex properties, we see that sales are down about 36% relative to last year. The condo market remained the most robust, with sales down only 25%. And it continues to remain the most active segment in our market, making up more than half of the sales in June. With buyers being less active, what we're seeing is that the homes available for sale in the market are taking longer to sell and the inventory is starting to accumulate. The total inventory of homes available for sale increased about 4% relative to May, however it's down about 4% relative to last year. But here's an interesting thing to look at, is while the total inventory on the market is starting to accumulate, the pace of new listings coming on the market is actually down significantly. If we look at the number of homes listed for sale in the month of June, we see that this total is down almost 18% relative to May, and it's down over 10% relative to last year. And this is a very important trend to pay attention to if you're a buyer looking to make a move in the next few months. And I'll touch on this a little bit more in a few minutes. Before we jump into pricing, let's take a quick look at what's happening with the sales to active listings ratio, which, if you recall, is the key indicator showing us where prices are headed. Currently in our region, the sales to active listings ratio is sitting at 23.4%. If you recall, analysts say that we start seeing upward pressure on prices when this ratio is over 20% and downward pressure on prices when this ratio is below 12%. Let's take a look at how this is affecting the different property types. Broken down by property type, we see that this ratio is currently at 14.3% for detached homes. So that's right on the cusp of a buyer's and balanced market. For townhomes and attached properties, it's currently at 31.5%, and for condo apartments, it's 30%. So let's take a look at prices. The HPI Composite Benchmark Price for all property types is currently at $1,236,000. This is down 2% relative to May, and it's down about 2.2% over the last 3 months. However, looking at this compared to last year, we see that it's up about 12.5% relative to June of last year. Looking at it by property type, we see that the benchmark price for detached properties is currently down 1.7% relative to May and is still up about 13.5% relative to June of last year. For townhome and attached properties, the benchmark price is down about 2.2% relative to May and up about 17.8% relative to last year. For condo apartments, we see the benchmark price is down 1.7% in May and it's up over 12.5% relative to June of last year. So what does this all mean and what's ahead for our market? Well, this is the big question mark and what we've been discussing with our clients. While the popular narrative right now is that the market's going to be on a downward free fall, we don't expect to see that. If anything, we expect to see prices plateau and maybe continue to decline slightly. And this is where I want to circle back on my point about watching the new inventory rates. Because what we're seeing now is an echo of what we saw this time last year, where the peak inventory levels and lowest buyer demand was between May and July of last year. That's when buyers had the best opportunity. However, many buyers stayed on the sidelines thinking that prices would continue decreasing, and what we found coming into the fall is that the new inventory wasn't keeping up. And it was that shortage of new inventory in the fall that led to the price increases and the frenzied activity we saw in the later half of the year. There's certainly a sentiment that what we're seeing now is similar to that, but of course, we're also dealing with rising interest rates and uncertainty around global financial markets. So how this plays out will be very interesting to watch, but I think it's very important to watch not just the demand and sales activity, but also the inventory levels and the pace of new listings coming on the market. As we move further into the summer months, we expect to see activity continuing to decline, similar to how we did last year as people shift their attention more towards summer activities. The important thing to remember if you're looking to buy or sell is that our market, just like the seasons, fluctuate and are cyclical. At the end of the day, your real estate investment should be a long-term outlook, and it shouldn't be based on short-term circumstances. So while it's very important to be informed and educated on what's going on in the market, now is really a time to sit back, enjoy a little bit of the summer months, and refocus on what you see for yourself long-term and how real estate may play into that. Thank you for joining me. If you want to stay in touch with what's going on in the market, be sure to follow me on Instagram at adina.yvr. And my advice to you is take a step back, enjoy the summer, get a gelato, and if you have any questions about the real estate market, get in touch and we can help you craft your long-term plan.